What's good, all my trader and investor homies? It's your boy Kevin. This is Touchdown Trades, home of your trading BFF and your stock market bestie. In today's video, we're going to be talking about a company, a stock that I believe to be the next Tesla. That's right, the next Tesla. They're coming for Elon. This company resembles Tesla in a lot of ways. In today's video, we're going to be breaking down the company and breaking down the stock, so you're going to want to stay tuned. Over the last 5, 6, 7 years, we all know the EV market was taken by storm by Tesla. Elon, the OG Elon, came up to the block, stepped out of his whip, flexed on everybody, and said, "I'm the boss here," and he was right. He took the EV market by storm, and the stock has made a insane move over the last decade, and a lot of investors and traders missed that move, but it's all good because there's going to be another one, and it's not going to be in the United States. A lot of investors have looked for the next US Tesla, but you don't mess with the OG. Why look for the next Tesla when there's already Tesla? But how about China? The Chinese EV market is massive. It is absolutely massive. So in today's video, we're going to be talking about the Chinese version of Tesla. This is a company that has kind of been flying under the radar, and I think it's about to burst onto the scene. This is a company with high growth potential and a lot of upside. So in today's video, we're going to break down the business model, break down the fundamentals, go over the chart, and I'll give you my opinion, my price prediction, and where I think the stock is headed over the next year or so. If you're new to the channel, we talk about the hottest stocks in the market every single day, so consider subscribing down below and hit that notification bell. Also, do me one big solid real quick. Do me a big favor, and that is to like the button. Go down there and just start clicking all the buttons. All right, let's break down this Chinese EV company that I consider to be the next Tesla. Let's get it. So I must be talking about NIO, right? NIO must be the next version of Tesla in China. Wrong. In my opinion, there is a better investment in the Chinese EV space, and it's not NIO. NIO is a good company, in my opinion, that has a lot of potential moving forward, but I don't like the fact that the Chinese government is invested in NIO. And I'm not hating on NIO as a company. I think it has a lot of potential. I just like this other company that we're going to be talking about today a little bit more, and I think it's cheaper from a ratio perspective. I think the numbers are looking better. Look at this NIO chart. It is just straight up to the moon, moving up from $5 a share all the way up to $55 a share with relatively no pullback. And you guys know my philosophy on investing, my philosophy on trading, and that is to never ever buy the rip, always buy the pullbacks, always buy the dip. So when I see this chart, it's just too extended, in my opinion, for me to take an investment. It could continue going up to $100 a share, but in my opinion, the stock that we're going to be breaking down today is a better deal, a better investment right now. Before we talk about the Chinese Tesla, after the video's over, check out the link in the description for Webull. Webull is the absolute best broker out there. They just launched their new amazing active desktop platform, which is absolutely great. And if you use my link, deposit $100 or more, you will get 3 free stocks valued up to $1,600. You can't beat that deal. Check out the link after the video. The stock that we're going to be talking about today, the stock that in my opinion has a lot of resemblance to Tesla, maybe the Chinese Tesla, is ticker symbol XPEV, Xpeng Motors. Yep, that's right, Xpeng. Yes, it also has made a really big move, but what EV stock hasn't made a huge move over the last few months? I still think XPEV, Xpeng Motors, is undervalued, okay? So we can see on the chart that they based out at $17, and over the last month or so, we've ran up to all the way to $51 a share. That is a huge move. There's no doubt about it. That's a 400% move, But in my opinion, XPeng is still undervalued. Let's talk about why. First of all, the EV market in China is absolutely massive and growing faster than it is in the United States. The new energy vehicle sales last month in China, which includes EV cars, totaled over 160,000 sales last month. That is 105%. An increase of 105% compared to the same month last year, while regular cars in China only saw a 12.5% gain in sales. So if we continue to see that exponential increase in EV sales in China, that is just a huge boost for car companies like XPeng. More people buying EV cars, a rising tide lifts all boats. And XPeng is primed to take position as one of the leaders, if not the leader, in the EV sector in China. Part of the huge move that XPeng has made over the last month was due to it beating their earnings report. Their third quarter earnings release was absolutely great. It was a great earnings report. They crushed it. They delivered 8,000 vehicles, over 8,000 vehicles, an increase of 265%. From 2000 quarter over quarter, and an increase of 165% from the second quarter of 2020. Just a great quarter for XPeng stock. They reached 6,000 deliveries of the P7 compared to 325 quarter over quarter. They are also involved in the EV charging game. So as of September 30th, 2020, XPeng branded supercharging stations expanded to 135, covering 50 cities. You guys know how I feel about EV charging. I think it is going to be a huge business in the future. XPeng started mass delivery of the P7 in late June 2020. Okay, so they did report a loss, bigger than expected, but I do not care about net profits. You guys know how I feel about growth companies, growth stocks, and my biggest factor is not earnings, it's not profit, it is revenue. Growth stocks, you want to see that revenue increasing exponentially. So XPeng did report a loss bigger than expected, but I personally don't care about the loss because they crushed revenue. Revenue is growing fast, fast, fast. They reported a revenue of $280 million for the third quarter, representing an increase of 376% in the same year. We're going to see a revenue growth for this company straight to the moon. And after they get that revenue up, then you want to work on increasing the profit. First, they need to focus on getting the revenue up. Right now, XPeng has a market cap of $33 billion. Okay, so it's about half as expensive as a stock like NIO. And you might be asking yourself, how in the world can a stock that's only posting $200 million a quarter in sales have a market cap of $33 billion? That's a price to sales ratio of over 100. Well, first of all, Tesla still has a huge price to sales ratio, even though it's a way more established company. But growth companies, growth stocks, their growth is so fast, the growth rate is so fast that you have to price in that growth. And that's why the price to sales ratio is so big. If this was only a car company, the $33 billion market cap would be too expensive. But I'm going to explain to you why it's too cheap. XPeng is focused on autonomous driving. They have a lot of people in the R&D space focused on getting their vehicles ready for autonomous driving. And why is that important, especially in a country like China? Robo-taxis, baby. That's right, robo-taxis. I know it sounds futuristic as heck, but this is going to be a $30 to $50 billion industry by the year 2030. And XPeng is getting ready to position themselves as one of the top players in the robo-taxi space. That is why the $30 billion market cap is too cheap. You have the common consumer EV market, you have the EV charging market, you have robo-taxis. $30 billion is too cheap. I think they're going to be neck and neck with NIO in just the next few years. NIO is a $60 billion market cap. So if they can just catch up to NIO, we're looking at a 100% move from where we're trading at today. So right now in 2020, the robo-taxi market is expected to be only 2,000 units. Not very good. But by 2030, we're expecting it to be around 4 million units sold in the robo-taxi space. An absolutely huge market. It is going to be big business, and I think Xpeng is ready to take over the Chinese robo-taxi game. All right, let's take a quick look at Xpeng's cars, Xpeng's products, and then we'll take a look at the chart, and I'll tell you guys where I think this stock is headed, and I'll put a price target on it. So we have the G3, what we're looking at now. Looks like a nice little crossover SUV. It's a good looking car, there's no doubt about it. And the P7 is the one that's really been selling like crazy. Pull that up real quick, take a quick look at it, if it'll ever load. So this is their sedan, the P7. It is an awesome looking vehicle. I don't think there's any arguing that. Outfitted with the X-Pilot 3.0, and it has a 706 kilometer range. So it has really nice range, has the autopilot, and I think this car is primed to make some major strides in the Chinese EV space. You got that slick interior, you got that Tesla screen right here. They tried to model after the Tesla. You got the nice leather, off-color leather seats. It is just a really nice looking vehicle. All right, guys, let's jump into the chart real quick. So there's no doubt about it. Xpeng has made a really big move over the last couple of months, running up and breaking out and trading over $40 a share right now. It's pulling back into the support area we have right here at the $40 level. So I would love to start a position at that $40 area and look for this thing to break out. And I would really like to get long towards this $35 consolidation area. I don't think we break below this area. Look at the volume traded on these days. We have a gap fill, and we also have tons of volume traded, and we know volume acts as support and resistance, not price. Volume is support and resistance, and those are the biggest volume days on the chart. So that $35 area is very, very key, and I would love to start a position on a pullback down to that $35 area. I think this stock is too cheap at $40. I think it's too cheap at $45. I'm putting a 12-month price target of $70 per share on Xpeng stock. I think it's too cheap. I think they're quickly catching up to NIO, and I think NIO and Xpeng are going to be head-to-head competing for the Chinese EV space here in the next couple of years. So this stock has made a huge move, but I see it still to be undervalued. But I am going to respect my rules and hold off and just sit on the sidelines until we get that pullback into one of those support areas. All right, guys, hope y'all got something from the video. If you did, do me a favor and like the button. If you haven't yet subscribed, what are you waiting on? I mean, what are you waiting on? Hit that subscribe button. The #1 stock market and investing channel on all of YouTube. Subscribe, baby. And check out the link in the description for Webull. If you're looking for a new broker, Webull is the absolute best broker out there right now. Fast executions, great customer service, and if you sign up using my link, deposit $100, you'll get 3 free stocks valued up to $1,600. You can't beat that. All right, guys, I'll catch y'all on the next one. Until next time, peace out.